hey guys, thank you for joining us. I'm Nathan from the Landlord Academy. We got Bryan Chavis here, best-selling author of Buy It, Rent It, Profit, and the Landlord Entrepreneur. And we're excited to be able to share with you a sneak preview of a new training that Bryan is putting together. As you know, investing in multifamily, there's lots of different ways you can do it. But one of the ways that we're going to highlight today is apartment syndication. So Bryan, once again, thank you for being here, man. Really appreciate it.
Hey man, it's always awesome to connect with you on Tuesdays, man. This is becoming one of my favorite days of the week, Nathan. Content Tuesday.
Absolutely.
Yeah, man. I'm loving it, man. I'm loving it.
Well, I would love it if you could, just tell us, why did you decide to create this course in the first place? And then, maybe if you could just walk us through some of the slides, let us know what we're going to be getting into. But why did you decide to start up something like Apartment Syndication 101?
Yeah. It's really, I figured I wanted to do a master class of, more of a Bryan Chavis master class that kind of told my story. Because it's a story that I feel that it's necessary, and everyone has always has encouraged me to tell it. To be honest with you, when I hear it, my story, sometimes on the last Gail Griardo News Channel 8 did a story on me. It's kind of hard to believe, what I've gone through. Not only the brain tumor, but even before that, coming out of humble beginnings, special education student. I'm playing in the world of, advanced finance topics and, underwriting techniques that, people go to school for. They have MBAs.
Right.
I have an underwriting team that I have now, and everybody on my team has an MBA. I'm the only one with a high school diploma, and, and at that, it's a special education diploma. So big shout out to anybody who's in special education that's, thinking that, the only thing they can do is go get a manual job or manual labor or whatever it may be. I'm living proof that, if you set your mind to it, anything's possible. So I wanted to blend that story in with, some training and education that, kind of comes from my mindset. It's not complicated. I've broken it down to where, where I can understand it. And I hopefully, that means that, I can kind of convey the message, the tips, the techniques, and the skill sets to the world and share. I think we already know from the last post that we've done, we've only done one post so far. The response we got from a young man that said, how the book changed his life. So that's what this is all about, Nate. It's really about, help changing people's lives and giving them the tools and resources. So that's where the skill, the overall mindset comes in. This particular course is really a course that's going to be in great detail, the framework on how I get it done, without using my own money. So I'm replacing money with skill sets. So this course is designed to give the individual that takes this course the skill sets and tools and systems they need to go out there and be successful, whether to start their own apartment syndication. Maybe, they may start off wholesaling apartments. So I'm going to show them how to do that. I'm going to show them how to start the syndication. I'm going to show them how to create the entities and, once properties are acquired, how to manage those assets. Then they want to turn those assets over to a third or second party property management company, how to then become the asset manager, set the tempo. This is what this course is going to kind of go through. So I'm excited to kind of give you a little sneak preview today.
Absolutely. And I'll preface it as well. I moved to Florida to actually learn how to invest in real estate. And I remember when we first met, I was really excited. I'm saving up all my money, I'm buying these properties. And then you hit me with what you don't need to spend your own money, man.
What are you doing?
And after being able to travel with you, my ears just perked up. So I'm thrilled that you put this course together, man. And I'm sure it's going to blow plenty of people's minds. So, please take the floor.
Oh, thank you. Thank you. I greatly appreciate it. Yeah. And I'm excited to I'm excited. And just real quick, it's funny you say that. I'm really excited for you because, again, you've been here from the beginning. You've been here, soon after, my diagnosis and joined me. And, you haven't really seen this part of it yet. We kind of, did fell back to what we knew, which was the property management training. Really didn't get into the syndication and apartment investing until now. where we are with the brand. So I'm really excited to be able to, to put projects together and bring you in, so you can, be a part of that and live your dream, which is becoming an apartment owner. So, excited about that. And, and I'm always thinking about that when I'm designing these courses, people like you, that kind of really fuels me. It motivates me to design these courses. So with that being said, let's jump in to the first slide. Hopefully everyone can see the screen. So we have, give me the nod, Nate, and okay to move forward.
You're good to go.
All right. So we got Apartment Syndication 101. And really, we kind of will dive more in depth to what a syndication is. You can really syndicate anything, any kind of business. But for this, for what I do, apartment syndications, is basically putting together or pooling together resources, funds, monies to go out and to acquire multifamily investment, apartment buildings. So your syndication, there's typically a 506B and a 506C. Those are, I won't go too far into the weeds, on what those are right now, because that's not what we're here to do. We're just going to kind of briefly take you through it. But there are two types of exemptions that the SEC allows you to do, because when you start raising money from other sources other than family and friends, typically you need to file with the SEC. And obviously filing with the SEC requires a ton of money, but they give you exemptions. Thank God for the two exemptions that I just mentioned. The 506B and C allows you to target two type of groups of investors, one accredited and then non-accredited investors. And then it gives you the guidelines on how to proceed and do so under those two exemptions. And they're much less expensive than filing with the SEC. So, that's just a brief overview. Of course, we go in much greater detail in the course. Then we get into limited partners, what that looks like, who they are and defining who they are as far as, what type of equity they bring to the table. Everybody that you reach out to and you raise money through, they're going to be your limited partner. You will be the GP, the general partner. They will be the limited partner putting funds in. Typically, those individuals will put in anywhere between 90% to 100% of the equity requirement to go after and acquire those apartment buildings. And then from there, there's usually some sort of, and we'll get into more detail, that there's some sort of guidelines and preferential returns that they're looking for. And then there's typically some sort of waterfall structure that will go in more detail that accompanies the structure that you've created. But these limited partners are typically high net worth individuals. They can be institutions or pension funds. Typically, if they're going to, if you're getting into pensions and pension funds and institutions, things of that nature, you're going to have a track record. So, this is something that you want to build up to. But not necessarily, it's probably not going to be, you're not going to be working with a pension fund right out of the gate. You're probably going to be doing the friends and family, and the accredited investor route, the first couple of deals you put together until you get that track record. Then the GP compensation, which is the general partner, which is you, the typical fee structures. And again, we go more in depth, but this is just kind of giving you a brief overview. When you structure your deal, this is the way you generate income in the project. Acquisition fees, property management fees, construction fees, disposition fees, asset management fees. You can kind of go on with various different fees that you can charge as the general partner. And then you have, as we talked about, the waterfall and the promote structure. So on the back end, how the general partner actually makes his or her money. This is how you make millions, in fact, is through your waterfall. And typically, there's a 90-10 split. 90% goes to the equity investor. You might have a split pari passu according to the equity split. So if they put in 90% and you put in 10%, 90% will go to them from the cash flows. 10% will go to you, and you'll do that pari passu until you reach the pref that you've established. Let's just say that's an 8% cash on cash return. Some people attach it to an IRR, but I want to keep it simple for those and not go too deep into the weeds with eternal rates of returns. if we keep it really simple, it's easier for individuals to follow along right now. So you might have, let's just say, an apartment building that you purchase, a 10 unit. It may throw off a 12% cash flow according to your underwriting. You'll offer an 8% pref to your investors, giving them an 8% cash on cash return, and you might split that 90-10. You might split that, 95-5% going to you, depending on, if you put equity in. Sometimes you don't have to put equity in to get a percentage. You'll just say, hey, look, I take 10%. I give you 90%. And, my skill sets is my equity investment. So, that's really up to you as the general partner of the syndicator. In this case, to keep it simple, it's a 90-10 split until we reach the 8% cash on cash pref. Once we reach that 8% cash on cash pref, then we can split the returns 70-30, 70 to me, 30 to the limited partner after the hurdle has been met. So, that's a really simple waterfall structure. They can get as this course will go into greater detail as we further into the course, you can get really complex with your waterfall structures, again, based on IRRs, based on cash multiples, various different hurdles that you set on the back end. And these are all different ways that the general partner gets paid. In the meantime, keep in mind, if we make that 8% pref, that 70-30 split, that's an additional 30% that investor is getting. And now you're getting 70%. What is your cash multiple? And you never put a dime into the property. Think about that. You know what I mean? You tell me what other way you can make this kind of money using skill sets. You know what I mean? That are available. I wish someone taught this in high school to me. I wish someone taught this in high school to me. So, I wouldn't have felt like I had to bank everything on playing sports. Right. I would have eliminated a ton of pressure. And I feel like, this is where, obviously I think this is where our school systems and a lot of people fail us, but I digress. I don't want to go too far into that speech, but what you hear is, it works me up.
You're absolutely right, man. Digress a little bit. So let me ask you a question. What type of degree do you need to do property management?
None.
Absolutely.
None.
The barrier to entry is not there. So you can actually get into this. Anyone can do this as long as you build up the skill sets.
That's it, Nate. And you're talking about millions, I'm not talking about hundreds of thousands. You're talking about, if you build a company correctly, you can make millions with your skill sets. And, with a limited investment of $20,000, $30,000 to learn and take courses, you showed me where you can do that in the school system, where colleges and things of that nature are charging hundreds of thousands of dollars and people are graduating and can't even come out and get a decent job.
Right.
So, but yet, trust me, those student loans are still, those bills are coming in every month, and and you can't even file for bankruptcy. It's the biggest racket that I've ever seen. You know what I mean? So once you get into that web, to me, that's crap. Excuse my language, but it's ridiculous. So yeah, I'd rather learn this where I can make millions of dollars, and always have these skill sets. Look at my story, brain tumor, loses everything, falling back on my skill sets. This is something that's, once you learn, no one can ever take it from you. So again, I digress. I'll keep moving. But so that's the waterfall structure. This is really the meat and potatoes and how you get paid on the back end. Okay. So very important to learn. Then we get into the general sponsor, and this is kind of, what the, as the sponsor, what you're actually requiring, from your limited partners. It can be equity requirement from 0 to 10%, significant operating experience. These are the things like the bullet points that I kind of highlight what you need to have as a sponsor. You need to have equity, sweat equity in, as we talked about the skill sets, significant operating experience. Where does that come from? It comes from our training that we're offering. It comes from jumping into my coaching program. Coming out to the property and putting in your time, like Johnny Vandal, he works with Duke Energy, full time, but he spends his his free time at Park Plaza in downtown St. Pete, putting in the work. So, he's getting that experience as an operator. I've got several other students that do the same. But, you want to be able as an operator or the operating partner, you want to be able to come to the table and say, I want to put, 0 to 10% equity requirement. If, again, for me, it's been 0. I'm not putting in any equity. I'm bringing the knowledge to the table to get the project from point A to point B. At the end of the day, it's really about, it's really about that sweat equity, you know what I mean? And putting in the work and having the skill sets to do so. Who you're targeting are typically accredited investors, and I go into more detail here about those accredited investors. It's up to 30. You can have up to 35 under a 506B. You want to get with an attorney with this, a qualified attorney that can walk you through this and set up your documents. But it's typically, if you're dealing with non-accredited investors, it's up to 35 non-accredited investors allowed. An accredited investor could rank. The definition is up to $200,000 for at least 2 years, $300K. If filing married or jointly, liquid net worth of over $1 million. And again, when you're targeting these individuals, you want to make sure that you've spoken with an attorney and your documentations and your docs are in order. Your PPMs, your OMs, you want to make sure those offering memorandums and private placement memorandums are airtight. This is, you don't want to get yourself in trouble with the SEC. Trust me. So you want to make sure you're reaching out to someone who is qualified to be able to create the documentation for you. Entity formation. You can typically, you want to start with an umbrella corporation, and then from there you'll put the project under, let's just say you've got that 10 unit or 50 unit apartment building. You put the project under contract with your umbrella corporation, and then you'll have an SPE, a single purpose entity, Nate, and then that single purpose entity, the umbrella company will assign the rights to the contract over to that single purpose entity when you're in the contract. So you want to make sure that your PSA, your purchase and sales agreement, specifies that you can assign your that property to the SPE, the single purpose entity that you set up. Then of course you want to make sure you choose your state. You want to also reach out to an attorney and make sure you're creating your LLCs in the state that's going to, better benefit you from a tax shelter purpose. So you want to keep that in mind. Usually you're creating a general LLC. Generally, it's an LLC taxed as a limited partnership or operating as a limited partnership. You want to make sure that you're getting whatever certificates of good standing that is needed. And that's usually state specific as well, if it's required at all. And then you want to set up your bank accounts. You typically set up an operating and a escrow account, and then those accounts are where you're going to wire money into. From your investors will wire the money into when you're doing your capital calls. It should be easy. Some investors like to send a check, but most people will wire the money. Most investors will wire the money, even though there's a fee associated with it. Very rarely have I come across individuals wanting to actually send a check. They typically will go ahead and wire, but you need to have your account already set up and to be able to receive that wire. And this is very time sensitive. And as I go into the course in greater detail, of course, we're not going to cover the entire course today because there's over 80 slides, but it talks about the timing of those capital calls. So you just want to make sure you get that done and allot yourself at least 7 days to do that. And then you want to make sure you assign the contract from the umbrella company to the SPE, which is a single purpose entity. And, that single purpose entity is usually acquires the apartment building. And that's what you're going to run everything through from the point of taking over the property to the point of sale. And, then we go into detail on how you dissolve the property or the corporation correctly. After that, we go into greater detail in this course about, how you file, how you how you file your taxes and give the K-1s to the investors, how you report to the investors on a quarterly, monthly, yearly basis. It depends on, how you set up your systems and your whatever the protocol is for your corporation. But typically I like to do something quarterly. Nowadays for investors who are on the go that really are not interested in long drawn out reports, nowadays you can do Zoom calls like this, or you can shoot videos live from Facebook and post them and just kind of go over and do a state of the union of your properties. And we go into great detail on the course are in the course of, what you need to put in those quarterly reports, the reviewing of the rent rolls, talking about the occupancy, current occupancies, budget versus variance of actual income coming in, what you have budgeted, for improvements. We cover it all. So, of course, we go into greater detail in the JV and the operating agreement. This is the joint venture operating agreement. This is one of the most important documents. And of course, you want to get with your attorneys on this. One of the most important documents. It basically lays out the rules of the game when individuals invest with you and they sign this. And you want to make sure that all of your investors sign your operating agreement, pending the wire coming into your account. So, once you've done the wire and you've made a capital call and all the money's in, just please make sure you're getting a copy of your operating agreement to all your investors. Make sure that it's been signed and they received a copy and you have a copy for your documentation as well. And of course, I bullet point what's usually in your JV operating agreement. Talks about who has the decision power who has the power to make decisions, capital contribution requirements. If there's a capital call, what does that mean? If let's just say we need to put a new roof or landscaping in on that property, and you do a capital call of $10,000, and an investor says, "No, I'm not interested." What happens if that investor says, "No, I'm not gonna give $10,000 for a capital call"? Typically, what happens is it dilutes that investor's equity position or ownership position that they have shares. So it dilutes their shares in the investment if they miss a capital call. So, all those rules, all that is spelled out in this operating agreement. Fee structures, of course, you want to spell out, how you're getting paid as the operator in greater detail. And then the waterfall structure, as we talked about, what does that look like? You want that you want to have that. You can have that posted on your website as well. You can have the fee structures posted on your site. You can have that in your operating memorandum. Not operating, but your offer memorandum. When you put a deal together, you can have it in there. You can have it on your site. You can have it in any kind of literature to where you're advertising your company or your business. Follow the instructions under the SEC guidelines. Depending on your exemption, you want to follow those rules and receive instruction from attorneys when doing so. So we cover that in detail. We give you all your options, basically telling you whatever route you take, we have you covered in this course. And then we show you what a fee structure looks like. Acquisition fees are generally 1% to 2% of purchase price, Nate. Construction and management fees are usually 4% to 7% of total hard costs. Asset management fees are typically between 1% to 2%. Property management fees are typically between 1% to anywhere to 10%, depending on where the property and the location of the equity invested. Disposition fees are typically anywhere from 0.5% to 1% of the sales price. So those are your typical fee structures that you put in place, and all the ways that you're making money as a syndicator. So. And if you're doing the property management, the course will also go into greater detail, all the fees that you can receive from property management as well, which are a ton of fees. I'm sure you know all those from traveling with me for the last 4 to 5 years. You kind of can back in and understand where you're making a ton of more money by owning and operating the property management entity as well. So, and then this kind of gives you, we're going into greater detail of promoted interest. What does it mean? When you hear that word, promoted interest, sometimes it's defined as carried interest, carried over interest. Basically, that's the money you receive after the pref. So the investor receives a preferential return of that 8% as the deal that we kind of talked about for an example. They receive the 8%. Anything after that 8% is called the promote to the syndicator or the general partner. And that promote split can be 70-30. It can be 80-20. Which means 70-30 is 70 to you, 30 to the limited partners, and it spells out what that looks like and how that how that in the waterfall structure, how that is distributed as far as distributions are concerned. But this kind of goes into greater detail of what you can expect and how you create that structure. But in order to create a great waterfall structure, you have to have a good understanding of promoted interest. and how you get paid. And this slide goes into greater detail on how you exactly do that, how you get paid, the definitions as well, because your literacy is really important. I can't tell you how or stress how much the importance of literacy and being able to speak. I'm dealing with underwriters, just for a quick sidebar example. I'm dealing with underwriters, bringing them on my team and looking to hire a few, at least 3, to help me underwrite these deals. These guys are highly sophisticated with MBAs, man, advanced degrees, but I'm able to keep up, Nate. This is a kid that has a special diploma, graduated, and they told me the only thing I can really do with my special diploma is hope to get a job with the city. You know what I mean? McDonald's managers is, in no disrespect to a job with the city or a job at McDonald's. Those are all noble professions. But obviously I had my mind on something much larger for myself, and I didn't want to allow someone to tell me what I can and cannot do. If I wanted to run for president, I'll run for president. Yep. At the end of the day, but your literacy and understanding how to own your craft. I just think a lot of people don't do that. I own my craft. I hone it. If I want to do something, I want to play golf. I learned how to hone my craft. I'm out there every day. I'm grinding. I'm learning the fundamentals. I master the fundamentals. It's if I want to do something, it's always been in my DNA to master it. You can look at the Super Bowl champ Tom Brady. Yeah. This is a guy who has zero skill set coming into the combine, overlooked. But look how he approaches the game. It's really the exact same way. Look at his level of excellence. And that's something that we all should look at. You can't allow people to tell you what you can and cannot do. I mean, if you study this and you go through these courses and you take this and you grab this knowledge and you receive it and you learn how to master the lingo and master putting these projects together, you can sit before anybody and speak with them and speak their language. I'm speaking their language. They're not speaking mine. I'm able to hold a conversation and impress these individuals to where they're excited to work with me, and they're the ones having the MBAs. So, I mean, if you're watching these videos and you're sitting, and you're thinking about, all the obstacles that you have, whether it be bills and, people not believing in you, I don't know what it is. But if you're going to listen to me or you're going to be a part of my group, you have to check that at the door, because, me coming into this game with a special diploma, me coming into this game being hit with a brain tumor, through, running the height of my powers, you really don't have any excuses. So, master the lingo, master your skill sets. At the end of the day, as you can see, this is what we do here. So the last slide that I want to go, because we got 80 slides in limited time, and this is a sneak preview. The last slide that I want to kind of cover is the understanding the waterfall structure. So in your let me move this out of the way so you guys are able to see it. So we're gonna, in detail, because again, not getting too far into the weeds, but every time I in the previous slide, I'm gonna expose you to what it is you need to know. But then later on in the presentation, where necessary, I drill down and get to the root of it. And this is where we get to the root of understanding the waterfall structure in greater detail. So, and it's basically everything that I've covered. It talks about the splits and the typical splits that one can expect to do. In an example, it's you see here, I believe that's a little typo. Again, this is my slides that I'm my unedited slides. So you're getting a raw look at the creation of this course, but that's supposed to be 20% promote over a 7% cash on cash return. So when you're setting up these waterfall structures, I also know in the back of my mind, one thing that I was working with the underwriters, I also know in the back of my mind, hey, look, the waterfall structure is going to change my requirements, my equity requirements, my waterfall structures are going to change according to the deal. Right. So if it's a deal in the low income neighborhood, Nate, you can expect a higher risk, but a higher cash on cash return. If it's like where we are in Park Plaza, downtown St. Pete, and we're looking at projects there in core markets, it's going to be lower cash on cash return. So you got to know, according to the deal, how to set your waterfall structures up. But this just gives you a quick example. It says 205, but it's really 20% because the 5 is really the percent sign. I just forgot to hit the shift key. So it's a 20% promote over a 7% cash on cash, and then a 35% promote over a 14% cash on cash return. So, you know, different type of waterfall structures. You know, if you're achieving your goals and you're kicking butt, you should be paid accordingly. And your waterfall needs to spell that out. So if you get over at 8%, you actually get a 14%. What is the promote to you at that time? So it needs to be spelled out. The hurdles need to be spelled out. So again, we talked about that IRRs, cash multiple. You know, you can go into greater detail about those hurdles that one must meet. And then when you meet those hurdles, you know, what are the rewards for meeting those hurdles? Typically your structure is based on risk, and that needs to be explained. You know, you're typically doing what they call pari passu with your limited partner until you reach that PRIF. What does that pari passu look like? In our example, we said 90, 10% to the general partner, 90% goes to the limited partner until they reach the 8%. Once they meet the 8%, then they went to a 70-30 in this waterfall. Very simple structure. But, you know, all that needs to be spelled out. But typically that's how we in this course, we'll drill down and show examples of projects. And I'll show different examples like Class A property or Class A in a core market, B, you know, maybe in a suburb, and a C in maybe a lower income neighborhood, and what the structures should look like accordingly, and why they change, more importantly. So, yep, that's it. That's where I'm at right now. That's a sneak peek. There's probably about 70 more slides to go, but of course, I'm building it out, as you can see. But this kind of gives you a sneak peek of the Bryan Chavis masterclass. You know, everything syndication, apartment syndications, and really, it's going to be a great class, informative. But it's going to also be, you know, the story of how I'm doing it. You know, in actuality, great videos that will accompany this, and an awesome group coaching program with a great workbook that we're going to have. So the first course that we're launching, the Buy It, Rent It, Profit course, is going to be awesome. And that course is 90% done. All we have to do, Nate, is do what we're doing now and shoot the videos for those sections. But that course is going to give everyone the foundation that they need to begin their process of understanding the lingo, understanding what it takes to be an operator, an asset manager, which is the most important skill sets. I was talking with all the underwriters last night doing my interviews, Nate, and they all felt comfortable with my abilities. They can care less what my schooling background was. They were more impressed that I actually did what it is I said I do. You know, oh, I went to your site and checked you out. No, you know, they were more impressed that I was an operator than any degrees or the lack of degrees. They were more impressed that I had the ability to manage and operate property day to day. So that's the skill sets that we want to teach each and every person that comes in contact with us, Nathan. That's the good news we want to bring to the masses, is teaching everyone, giving everyone those skill sets to become operators and syndicators themselves. But it's rooted in the foundation, the cornerstone is rooted in understanding the property management, what it takes to operate that property from an operational standpoint day to day.
Absolutely. No, I love it, B. And I'm excited for the course. We definitely got a little bit of work to do. Get these done. I'm
excited though. I love it.
Absolutely. Once again, guys, please go to bryanchavis.com. You can also find us on Landlord Academy. We'll be housing the classes. We'll probably have some pre-sign up links for you as well. And as usual, please like and subscribe. If you guys have any questions, please leave them in the comment section below. And Bryan, thank you so much, man, for sharing this course with us. Super excited, and look forward to speaking with you next week, man. Yeah, man. Me too. Love Content Tuesdays, man. Until next time, guys. Continue blessings to everyone. Nate, thank you. Absolutely. Thank you. All right, bye. All right.